Most small business owners overpay their taxes by thousands of dollars every year because they miss deductions that they're entitled to take. In this video, I'm going to go over some of the most overlooked deductions that might actually save you money this year. Now, amongst the normal disclaimers of this not being tax or legal advice, you also need to do your own due diligence to see if these deductions even apply. But I'm hoping that this video will at least steer you in the right direction to look for something that you might have missed. As a small business owner, you wear a lot of hats: the CEO, the marketer, and sometimes even the janitor. And the last thing that you want to do is comb through the IRS or the thousands of pages of tax code in order to find something that you might be able to deduct. But you also have to remember that every dollar that you save can either go back into your business or go to feeding your family. Taking advantage of as many deductions as possible is not a zero-sum game by any stretch of the imagination. First up, the home office deduction. If you use part of your home exclusively and regularly for business, you can deduct part of those expenses that are tied to using that space. There are two ways to do it. The simplified method is $5 per square foot up to 300 feet. So if you have a 200 square foot office, then that's $1,000 that you can take as a deduction. But then there's also the regular method where you track the expenses associated with using that space. So this is where you would track your expenses like your utilities, your mortgage interest, or your rent, and then you would take a percentage of that based on how much of that applies to the space you use. Number two is health insurance. If you're self-employed and you're paying for your own health insurance, the premiums are generally deductible. That includes coverage for your spouse and your dependents too. So in this case, we might be talking about several $1,000s worth of premiums per year that you can then deduct. Number three is retirement contributions. As a financial planner, I have to be honest and say this is usually where you can get the most bang for your buck. The reason is because it helps you now and later. As a small business owner, you have access to plans like a SEP IRA, a solo 401k, or a simple IRA. You can see more information about that here in this video. And depending on your income, you can contribute up to tens of thousands of dollars. And every dollar that you contribute lowers your taxable income for this year. So let's say that you contribute $20,000 into a solo 401k. Not only do you get to deduct $20,000 from your taxable income today, that's $20,000 that now you can invest and it can grow in order for you to use in the future. It's one of the few deductions that is not tied to an actual expense of money going out, but rather money being shifted, but still ultimately being yours. Deduction number four is mileage and vehicle expenses. The IRS allows you to deduct a standard mileage rate for business from your car. Now the amount changes quite frequently, but let's just say for the sake of math, it's 60 cents per mile. Right now it's actually a little bit more than that. But that means if you drive 1,000 miles, that's $600. But that means if you drive 10,000 miles in a manner that you can actually deduct as a business expense, then it means that that's a $6,000 deduction. Now you can also track individual expenses like gas, repairs, insurance, and tolls, but you need to be extremely detailed in the way that you keep those records. So don't just guess when you go in to take that deduction. You need to make sure that you're tracking it very closely. In the places where you claim it, it needs to actually apply to your business. Number five is professional services and subscriptions. In the day of modern technology, so much of what we do boils down to paying for a subscription. Emails, websites, domains, CRMs, meeting schedulers, financial planning software, all of that is subscriptions, which means it's usually a very big line item when we're looking at our monthly budget: subscriptions. So don't forget to take advantage of the deductions there, especially when subscriptions is such a very big part of a lot of businesses' expenses these days. But the other part of that is professional services. Things like a CPA or a financial planner could be deducted depending on the way that they interact with you personally and the way they interact with your business. This is especially true for somebody like me because I do business consulting and give business advice as part of what I do, but I also do financial planning for people individually. So the line can become blurry, and this is where you really need to take a deep look at what your professional is actually doing and make sure that it's for your business and not just for you personally. Again, this is another place where you can deduct several $1,000s. And deduction number six, which might be a surprise, is hiring your kids. If your kids are actually doing stuff for your business, like helping you organize files, editing videos, or running errands, then you can pay them and you can deduct what you pay them. Now, it does need to be reasonable based on what they're doing. You can't pay someone $50,000 a year for doing 2 hours of work every week. But what it does allow you to do is pay them a reasonable wage and shift that money into their much lower, possibly non-existent tax bracket. The other part of this is that they can take some of that money and put it into a Roth IRA because now it's earned income. The reason that a lot of kids aren't able to contribute to something like a Roth IRA when they're a teenager is because they don't have any earned income. But if you're able to create that opportunity, you're able to pay them a wage that's reasonable based on what they do, you're able to shift that into their lower tax bracket, take the deduction yourself, and they can invest that money into a Roth IRA where it can grow tax-free for the long run. It is a win-win both for you and for your kids. Another deduction is continuing education. Courses, conferences, workshops, certifications. If they are tied to maintaining your business skills, then they're probably deductible. Now, you need to be very careful about how you go about doing this, as with all of these deductions, because they do need to be primarily done for your business and not something that you did and now you want to make it about your business. But the IRS does incentivize making your business better and investing money to do so. Now, these deductions only work if you track them. The worst thing you can do is throw your receipts in a file box and then try and sort everything out in April. Invest in some software like QuickBooks or Wave, and what might cost you maybe a couple $100 a year might actually prove to be worth several $1,000s a year in the tax deductions that you get. And also, don't try and do this all alone. This is why most business owners have a CPA on hand that they can hire both for their advice and for help in the prep work. A CPA will keep you compliant, and a financial planner will make sure that your deductions and your long-term tax strategy is going to fit within what your overall financial goals are. Deductions are only good insofar as we actually have a plan for the money that we're getting. And if you want to see how recent legislation might have affected some of these deductions, you can watch this video here.